Have you been following the recent drama surrounding Elon Musk and his acquisition of Twitter? Some investors were worried that he was leaving behind the electric vehicle empire to focus on the social media platform. But let's be real. What could possibly go wrong on Twitter? But as it turns out, the Twitter acquisition wasn't the only thing causing concern for Tesla investors. In fact, the company ended 2022 with a whopping 65% loss, the worst year ever for the company. So, what exactly went wrong? Well, let's dive in and take a closer look at some of the factors that discourage investors and how they may impact the automaker in 2023. First up, demand. While Tesla continued to dominate the electric car industry in Q3 2022, its market share did drop to 61%. This could be due to increased competition from other manufacturers who are also entering the electric vehicle market. It's no secret that the number of EV models that compete with Tesla has been on the rise, and as that number continues to grow, it raises some important questions. Will demand for Tesla vehicles remain as high as it has in the past? According to JD Power, by the end of 2022, there will be 53 EV models available in the US, up from 33 at the end of 2021. But despite this increase in competition, S&P Global Mobility reports that 4 out of the top 5 selling EVs are still owned by Tesla. However, the decline in Tesla stock has investors concerned that the company's position may not hold as newer models are released. The question is whether Tesla will remain as competitive as it has in the past or if its current lineup of cars will become outdated, given that it has been selling them for years. Another source of concern is the customer wait periods for Tesla automobiles, which dramatically decreased over 2022. Some investors interpret this as a sign that demand is beginning to decline. But on the Q3 earnings call, CEO Elon Musk addressed these issues and stated that demand for Q4 was very strong, and that they anticipate selling every vehicle they produce for as long as they can. Additionally, he stated on a Twitter Spaces call in December that rising interest rate policies were to blame for demand difficulties. So it looks like there are some challenges ahead for Tesla. But the company has faced obstacles before and has come out on top. Keep an eye out for how they handle these challenges in the coming year. Next up is production. In a May interview, CEO Elon Musk addressed these issues, stating that currently, the factories in Berlin and Austin are both enormous money furnaces. These production difficulties were caused by rising supplier and logistics costs, which were also exacerbated by skyrocketing inflation. From the raw materials used to make the batteries to construction-related costs or labor-related costs, Tesla and every other EV manufacturer today must contend with quickly escalating costs. Even though the car sector doesn't typically have high profit margins, all of that is increasing. This included spending approximately $11 billion on car-related expense in the first quarter for Tesla. This is not the only problem Tesla faced. Last year's stock decline was also a result of production interruptions, which caused Tesla to miss its goal for full-year vehicle deliveries. In 2022, 1.3 million EVs were supplied, an increase of 40% from 2021, according to the EV manufacturers. That fell short of its target of a 50% or greater increase in delivery. To reach that goal, it would have required more than 1.4 million. Stocks fell another 12% when the shortfall was announced to start the new year, the biggest drop in a single day in more than 2 years. One aspect of the issue was Tesla's China factories' infrequent closures, which were its largest in terms of volume. Due to China's zero-COVID policy, its Shanghai facility experienced a series of shutdowns, which undoubtedly contributed to supply concerns. One of the main issues that the company is facing is how to keep the factory running so they can pay their employees and avoid going bankrupt. This is a major concern as it directly impacts the livelihood of the company and its workers. Tesla's declining stock price. Another issue that some analysts and investors believe is exacerbating Tesla's declining stock price is overvaluation. Based on the hype, Tesla has been grossly overvalued for the past few years. Despite having only a small portion of their sales, Tesla was valued at its peak higher than the total value of the top 10 automakers worldwide. Many investors who have argued about whether Tesla is an expensive firm have done so on the grounds that it controlled a sizable portion of the US EV market and was the sector's pioneer. It's important to keep in mind that the stock market is always subject to fluctuations, and it's difficult to predict the future. But as always, it's important to do your own research before making any investment decisions. Some investors have raised that Elon Musk's claims regarding future automobiles have propelled shares higher, even though many of the cars didn't appear until years later. This has led some to argue that the company's valuation was influenced in part by its CEO's promises. A recent example of this is Tesla's Cybertruck, which was introduced 3 years ago but has still not entered the market. Another factor that has contributed to the decline in Tesla's stock price is Musk's decision to sell billions of dollars worth of the company's stock, which was partly motivated by his purchase of Twitter. Anytime someone sells $40 billion worth of a company's stock, the stock price will drop. It's unclear how this specific action is affecting other investors. It's important to note that requests for a response from Tesla on these issues were not answered. However, one thing is for sure. The Cybertruck is going to be a game changer and the wait will be worthwhile. Trust me. But as always, it's important to do your own research before making any investment decisions. As investors around the globe brace for an impending economic downturn, Tesla's stock price has taken a hit. A recession can make it harder for people to buy cars, especially more expensive ones like Tesla. While people who have otherwise bought a $60,000 electric vehicle in 2022 or 2021 now opt for a gas-powered car for $40,000 instead. As the world braces for the potential recession, Elon Musk, the CEO of Tesla, has a message for investors and staff alike. But fear not, according to CEO Elon Musk, Tesla is recession-resistant. On the Q3 earnings call for Tesla, he stated that even in a severe recession like 2023, the company will still make a sizable profit. Investors in Tesla are currently anticipating this month's earnings report from the automaker, which could provide a preview of the stock's future. According to Musk, the US is headed for a stormy recession, but he believes that Tesla will shrug off the stock market craziness and become the most valuable company on Earth. In an episode of the All In podcast released last week, Musk stated, "It does seem like we're headed into a recession here in 2023. My best guess is that we have stormy times for a year to a year and a half." But the billionaire CEO has faith that Tesla will survive and come out on the other side stronger than ever. In an email to Tesla employees on Wednesday, Musk wrote, "Long-term, I believe very much that Tesla will be the most valuable company on Earth, amidst a month that saw the electric vehicle maker head towards its worst year ever in the markets." Musk is known for his optimistic outlook and ambitious goals. But will his predictions come true? Only time will tell. But one thing's for sure, the world of Tesla and its stock market performance is definitely worth keeping an eye on. Thanks for joining us on this wild ride to explore the topic of whether Tesla stock is having its worst year ever. We've taken a closer look at the numbers and the factors that may be contributing to this decline. We've also heard from experts and analysts regarding their predictions for the future. As we've seen, the stock market is always subject to fluctuations, and it's difficult to predict the future. But one thing is for sure, Tesla has faced challenges before and come out on top. The company has a strong track record of innovation and a dedicated fan base. So what do you think about Tesla's stock market performance? Will they make a comeback, or is it the end of the road for the EV giant? Let us know in the comments below. Thanks for watching, and don't forget to hit the subscribe button for more informative videos on the latest EV news and trends. See you at the next one.